Hey guys, Nick here, back with another video, and today we're going to talk about some tips and tricks on filing your US tax return. So let's go. Alright, I got 12 tips to share with you guys. So we're going to go through them pretty quickly and talk about them on a high level. Certain things do require some more details, and I'll try to go over those in videos in the future. But for now, we're just going to talk about these quick and easy. And if you want more information, please feel free to reach out. Tip number one is to check your filing status. A lot of people file single when they could qualify as head of household. Now, if you do file as head of household, you do get better tax rates and higher deductions. So take a look if you are supporting someone like your parents, brother or sister, nieces, nephews, or children, you could qualify. So take a look and see if that's applicable to you, and definitely file that instead of single. To add on to that, if you are married, you might want to look at whether married filing separate or married filing jointly is better for your situation. More often than not, married filing joint gets you a better result. However, there are some examples for married filing separate. One of them being if you do have a lot of medical expenses. How medical expenses work is the less income you have, the more medical expenses you can actually deduct. So it might be a good idea to break up your income between spouses and report your medical expenses on one return. The other reason why you might want to file married filing separate instead of jointly is just for legal reasons. If you do want to keep things separate from your spouse, or if you are unfortunately filing for a divorce and you can't stand your spouse, you may want to keep things separate, and that way you don't have to combine your income if you are going through that divorce. Tip number three is to file your tax return. A lot of people decide they won't bother filing because their income is too low or they're just really lazy. I would encourage you to file because you could be missing out on refunds. There are some people who do come to me and end up filing for a couple years back and find out that they're in a refund position. That's free money that you're missing out on, and you're not getting it because you're not filing. So I would encourage you to file. In the US, you can go back up to 3 years and claim a refund, but if you go back further than that, the IRS may not issue you that refund. Another reason to file the tax return, especially if you're in a low tax bracket and you don't earn a lot of money, you could be missing out on what's called the earned income tax credit. And that's a tax credit that could issue you a nice refund if you qualify. So I would encourage you to go online, check your filing situation, check your income compared to the rates, and see if you qualify for that earned income credit. But that's something that you won't be entitled to if you don't file. So I'm telling you to file. If you can't file your return on time, at least file an extension and make the tax payment if needed by April 15th. As you may know, the US tax deadline is April 15th, but you do have an automatic extension to file your tax return for an extra 6 months. So your tax return wouldn't be due until October 15th. It's important to note, though, that just because you can extend the time to file your tax return, that doesn't extend the time to pay your taxes. All your taxes would be due on April 15th. If that's applicable to you, I would still encourage you to make that payment. But if you find yourself in a refund position, definitely file that extension, especially if you're not sure if you're going to be able to file by April 15th. It doesn't hurt to file an extension. It's completely free, and you'll avoid any late filing penalties. Speaking of April 15th, you have until April 15th to make traditional IRA contributions to get the deduction in tax year 2019. Tip number 6 is do not round your business expenses on Schedule C. What I mean by that is if you are filing a Schedule C, do not put like transportation, $500, phone bill, $200, utilities, $1,500. Everyone knows it's not the true numbers and it will be an audit red flag. So I do encourage you to report the true numbers of your business expenses and just keep receipts of what you're paying for and what you're claiming against. So if the IRS does come and audit you, you do have that backup. Lucky number 7 is if you are lucky and have some gambling winnings and you receive a W-2G, you can claim gambling losses against your gambling winnings. So if you are someone who frequents the casino, keep track of your wins and losses, because if you do win big, you can claim those losses against your gains and potentially offset any gambling winnings that you had, and therefore pay no tax on those winnings. My other tip is, if you have RSUs or stock options, check the reporting and the details on those and adjust the cost basis if necessary. You do not want to be paying double tax on those RSUs or stock options. I can get more on that in another video, or I'll provide some links in the description below. But just as a base level, check what your cost basis is for those stock options and make sure you're not paying more tax than you need to on those options. My next tip is, don't forget to report qualified distributions from your HSA. If you have qualified distributions, you'll receive what's called a 1099 SA. Please report that. If you don't, it might make it look like a non-qualified distribution, and the IRS does crack down on those heavily, so you may get audited when you shouldn't have really had to. Next, if you're paying a nanny for childcare dependent services under the table, you will not qualify for the child and dependent care credit. You'll probably end up saving more by paying the nanny under the table, although it's not exactly legal and I don't really support that. You are probably better off than you would be claiming the credit, so don't get greedy and trying to double dip, because you won't qualify. Number 11 is, don't forget about depreciation on your rental property. Now, depreciation needs to be taken, and it's most likely going to be the biggest expense that you'll claim against your rental income, so don't forget to report it. Also, if you made any renovations, any capital improvements on that property, you can also depreciate those. I'll have a link in the description below for more details. And my 12th and final tip, if you've stuck around this long in the video, thank you so much. Please give it a thumbs up, and please subscribe if you're getting value out of this video. But thank you so much for watching. Your viewership means a lot to me, so thank you. And I will reward you with the 12th tip, and probably the best tip, and that is, if you do receive penalties from the IRS for late filing or anything like that, you can fight those penalties. You don't have to just take the penalty and let the IRS push you around. You can fight those. There's what's called a first-time penalty waiver, and it means what it says. If it's your first time receiving a penalty from the IRS, you can use this waiver. It's actually not subject to just the first time. You can continue to use this under what's called the reasonable cause. So you can actually call the IRS or send them in a response via a letter, and they might be able to cancel your penalties or lower them. They won't audit the reasoning. They'll either accept or deny your reasonable cause statement. But to improve the chances of them accepting, there's a few things that you can claim. Obviously, you need to be telling the truth, but the most likely successes are if you do suffer from some type of mental health condition or a medical condition, if there's been a tragedy or death in the family. You can use those as reasonable causes as to why the penalty came about, especially if it's for a late filing penalty. Those are common reasons why you would file late, and the IRS would most likely approve that and eliminate the tax penalty that you had. So don't just file and pay those penalties. Try to fight them first. So that's it for today. I hope you got some value out of this video. Again, please give it a thumbs up, and happy taxing this season. April 15th will come up quick, so I encourage you to get your taxes done ASAP. But yeah, take care and happy taxing.